see the numbers are creeping up, Ali. So as and when you you want to get us going.
Let us wait for 2 minutes.
It's okay. That's good.
Assalamu alaikum. Good afternoon, everyone in Bangladesh, and good morning to my colleagues who have joined from the UK. Thank you for joining today's webinar. This is Ali Akbar Chaudhuri, Regional Director of the Institute of Financial Accountants, UK, working here in Bangladesh. May I welcome all of you to today's IFA Bangladesh online branch meeting with a training session on VAT deduction at source, related rules and regulations. I'm very happy to inform you, like our last Friday's webinar, the Head of Business Development of IFA UK, Mr. Jonathan Barber, has joined us this afternoon. Good morning, Jonathan. Please accept a warm welcome from our members in Bangladesh and the attendees.
Ali, thank you. Good afternoon and good evening to you all in Bangladesh, and good morning from the UK. You can tell we're getting into autumn here in the UK as it's getting a little bit cooler and colder, but the sun's out and it's a lovely day. So welcome to the 2nd September Bangladesh online IFA branch meeting. It's a delight to welcome you all, and it's a delight to be part of today's online meeting. As I was saying to Ali and our guest speaker a few minutes ago, it never fails to amaze me that tax, VAT is of as much interest in Bangladesh as it is in the UK. Tax and taxes are hot topics for all accountants and tax professionals. So I do hope everybody gets a lot from this morning's, this afternoon's, this evening's session. Just from my side, a couple of housekeeping points, if I can. Hopefully the next hour runs extremely smoothly and we have no technical issues. If for some reason we do, please bear with us and we will look to sort those as quickly as possible. You are all on mute, and if though you have questions that you want to ask Ali or today's guest speaker, please use the Q&A button that you will find on your screen. I know a couple of you have already commented to date, and we will respond to those questions. We will ask the speaker to answer those questions during the session. So please use that. Today's session is being recorded, and we will ensure that everybody attending gets a recording of the session afterwards as well. So just some housekeeping rules and points. Other matters, just wanted to reconfirm for all members on the on the session this morning that the Institute has annual CPD requirements that we expect all members to attain and achieve over a 12-month period. So from January to all members are expected to achieve no less than 40 hours worth of CPD. 20 of those are verifiable, 20 are non-verifiable. COVID-19, yes, has affected all accountants around the world, but it does not diminish, I'm afraid, our CPD requirements. As accounting, tax and business professionals, we have to maintain our standards. We must keep up to date. So the CPD requirements of your institute have not altered. Your feedback is vital. We are looking to support you locally, country as members. And we can only do that by you giving Ali, you giving myself feedback. If there are things that you would like us to help with, we need to know that from you. If there are topics for future October, November, December online branch CPD meetings, Ali would very much like to hear from you. If there are other issues and areas where you believe your institute can support you, please let us know. Ali has a WhatsApp group. People have his email address. Please use either form to communicate with him. For members as well, just a reminder that next month, in October, you will start to receive communications from the Institute about your membership renewals for 2021. It's not just about paying your fee to renew. Please let me be clear, that's part of the renewal process, but it is a mandatory requirement that you complete your member declaration. Everything will be explained in email communications when they start coming out to members next month. Again, though, if there are any issues around that, please contact either Ali or myself or the membership team. Please don't ignore them. Before I just move on so that Ali can introduce today's speaker, the number of registered individuals for this webinar has risen significantly since last week's, which is excellent news and really pleasing to see. Can I, though, just say to all non-members who might be joining us for the first time, it's a pleasure to welcome you. The Institute of Financial Accountants are a professional, internationally recognised accountancy membership body. The Institute are full members of IFAC, the International Federation of Accountants. That body are the global standard bearers and regulators for the accountancy profession. And because of the Institute's full membership of that body, it provides members globally, as well as in country, with enhanced recognition and reputational enhancement. If you would like any details or information about how you become a member, please contact Ali or myself, and we'd be more than happy to have a conversation to explain how we can help you. Our focus as a professional body is very much about supporting those accounting and finance professionals who work within a small and medium enterprise, an SME, or our members around the world own, run, or work within a smaller to medium-sized accountancy practice that are providing services to the public, whether those be individuals or micro, smaller, medium-sized business entities. So we welcome both members and non-members today's session today. Ali, I'll pass back to you so that you can kindly introduce today's speaker, who we thank very much for his time and input.
Thank you, Jonathan. I appreciate your continuous support for developing the accounting and tax professionals in Bangladesh. Before starting the session, I would like to introduce today's speaker, Mr. Alauddin, and welcoming him to start his presentation. Mr. Alauddin is a chartered accountant having fellow membership of IFA Bangladesh, IFA UK, and IPA Australia. He is also an associate member of the Institute of Chartered Secretariats Bangladesh. He has more than 15 years of experience in the field of accounting, internal audit, finance, and taxation. He has expertise in IFRS, company affairs, secretarial works, IPO, tax and VAT planning, financial modeling, accounting software, and internal control system. Currently, he is working as the CFO and company secretary of the General Pharmaceuticals Limited, Bangladesh. Fellow attendees, may I request Mr. Alauddin, FCA, FFA, FIPA, to start his presentation on VAT deduction at source, related rules and regulations.
Thank you, Ali, for that introduction. I've stopped sharing my slides, so Mr. Alauddin, you should be able to upload yours now so that you can commence.
Thank you, and assalamu alaikum. Also, good evening in Bangladesh and good morning at UK. Thanks to Mr. Jonathan Barber. Thanks, Alinda. So far, I know CEO Mr. John Edward also joined here. Thanks, Mr. Ali Akbar. And very warm welcome to our fellow colleagues, fellow members who are joined here today. Today's CPD requirements topic was VAT detection at source. It's simple, say we can BDS related act, rules and regulations. It may not be need to present myself, introduce myself, is already introduced by Mr. Ali Akbar. So we may start at VAT deduction at source. VAT deduction at source, especially in Bangladesh, very small area for VAT, but it's very vital area because of it has huge capital penalty if you not follow the policies and rules and regulation. And some case it goes to imprisonment. And Bangladesh government is very strict about VAT due to is indirect tax, which is mainly paid by the end user. So we may go forward to know how to deduct VAT and what's the rate and policy. So we go forward. Thank you, everyone. Mainly in introduction space, I want to say topic of the presentations today. Number one is value added tax. What is value added tax? Number two, history of the VAT added tax in Bangladesh. Number three is the VAT deduction authority. What the VAT deduction authority? Number four, I summarize some rate, especially which is declared in 2020 under Finance Act. That is summarize the VAT rate and BDS rate in Bangladesh. VAT accounting cycle, how to maintain the VAT accounting cycle. VAT related to SRO is also disclosed here. Penalty under the VAT Act if not comply the VAT deduction at source. Some changing in Finance Act also include these presentations, jurisdictions of VAT authorities and others. So firstly, we want to know what's VAT. What is VAT? Everyone know what is VAT in Bangladesh who are practicing or non-practicing or knowledgeable or learning. VAT is the indirect tax on most goods and services, sometimes levies, and it's paid by the initially manufacturer or service provider. Finally, it goes on end user who are mainly use the VAT. How does this work? VAT registered business charges value added tax, goods on service and supply, just to reclaim when they sell or acquire the business purpose, it will be adjusted. And finally, this VAT paid by the end user. VAT history in Bangladesh. So far I know, we know what the VAT history in Bangladesh. Then I also again rememorized how to introduce VAT in Bangladesh. In 1979, the Taxation Inquiry Commission, TEC, super everyone know TEC, officially introduced VAT in Bangladesh to sales, how to collect from sales only. Then 1986, the World Bank playing pioneer role to implement introduce VAT in Bangladesh. And World Bank Mission visited Bangladesh for preparing an agenda for tax return in Bangladesh in December 1986. 1989, the mission submission its final report on 15 October 1989. The report recommended the introduction of a manufacturing import stage VAT at a single standard rate, only single standard rate for 3 years. 1999, the government discussed, 1990, the government discussed the issues relating to introduce of VAT with all related private and public agencies. The government prepared a Value-Added Tax Act 1990 draft in June 1990. And finally, 1991, the Value-Added Tax Bill was passed by Parliament in July. Mainly from 1991, we know the VAT Act, everyone follow the VAT Act of 1991. Then some amendment here. In 1999, after 1991, 2012, Value-Added Tax is revised and new act implemented, not implemented, it's actually Parliament proposed and passed on December 10, 2012, which is called Value-Added Tax and Supplementary Duty Act 2012. 2050, Development Surcharge and Levy Act published on November 21, 2015, which is imposition and collection of secondary VAT. 2016, Value-Added Tax and Supplementary Duty rules was introduced in National Board of Revenue. And 2019, Value-Added Tax and Supplementary Duty Act 2012 was implemented, which was acted in 2012. VAT Deduction Authority. Who can deduct the VAT? It's a similar to tax deduction, which we were know on last CPD through by Mr. Rafaul. It's a number 1 government organization, number 2 semi-government organization, number 3 autonomous body, number 4 non-government organization, number 5 banks, number 6 insurance companies, number 7 financial institutes, number 8 limited company, both private limited or public limited, then educational institutions and institution under large taxpayer unit who are the registered with large taxpayer units, they also can deduct the VAT. VAT rate summary, which is summarized mainly 2020. What is VAT rate industry was? The standard VAT is 15%, but if you are local trader, it's normal rate is 5%. For commercial importer also 5%. Procurement by VAT at 7.5%. For exporter, it's a 0%, zero rated VAT. In the industry of service, 5% VAT rate for internet service, any other indenting, IT enabled service. In case of restaurant, construction service, furniture 7.5%, motor gas and other security service tailors 10%, and professional service like consultancy firm, chartered accountant audit or chartered secretary audit, any consulting is a 15% on VAT. And special VAT rate applicable for some service like LPG, gas, milk product is 5%, trader of medicine 2.4%, for land development and retail estate business 2%, SIM card of phone 1200 per SIM, and MS goods stores 1000 per metric ton. It's a simple VAT summary rate. Normally these rates are applicable in Bangladesh. Previously it was used rate 1, 2, 3, 4, 5%, 10. Now only main is 4 separated. One is 5, one is 7.5, another is 10%, and finally is 15%. But especially 4 is not related to directly, it's related to supplementary and surcharge. That's why one is 2.4%, another 2%, and another per seems 200 taka and per metric ton 1000 taka. Then we goes to main topic today, VAT rate, BDS rate in Bangladesh. There are 43 services in Bangladesh as per VAT Act 2012, SR number 149, AIN/2020-110 Mushuk dated 11 June 2020. As per this circular, and on 43 service and goods, we should deduct the VAT. There are, I summarize here. It should be aligned with service code. If you change the service code, you maybe change the VAT rate, though the description or service is same. So we should careful about service code. If it is same, so we need the separation by service code. So there is where right is like SC hotel 15%. So for I believe it's not required to discuss. We know the percentage. We know the we have a sheet. We have a Mushok number also circulated by the NBR VAT authority. This is the number 43 service and goods. We should deduct the VAT rates. Then I may say something like VAT, how to deduct and collect the VAT. This is 43 service. So far, I believe it's not required to discuss. It's only rate, name of service, service of goods, course, which course you may deduct what rate of VAT. But if I know this summary position, it easily to deduct the VAT. VAT added tax at a glance. How can I deduct? When I may deduct, which I may not be deduct. Type of supply, product or goods. VAT rate is 15%. If VAT rate is 15% on such goods and products, and issues VAT invoice, we not deduct the VAT. There is, I segregated here, no deduction is required. But if not provide invoice, we should deduct the VAT at the rate of 15%. If it is reduced rate, that means below 15%, issued invoice or not issued invoice, we should deduct the VAT. It is exempted as per first schedule, need not deduct the VAT, issues the invoice or not. And exemption through SRO, some companies in Bangladesh, especially they take SRO from the NBR for exemption from VAT. Such case, it may reduce or may not be 15% or something else. You should deduct the VAT if it is applicable as per schedule 43 service, which we disclosed previously. Services. Normally 43 goods and services we also discuss. If you provide invoice or not, we should deduct the VAT at source. If it is 15% rated VAT, if gives challan, should not deduct. If not gives challan, should deduct. If it is service reduced VAT, same as previous. If he added invoice or not added invoice, we should deduct the VAT. In exemption first schedule, should not deduct the VAT. And exemption through SRO, same as previous. Issue VAT challan or not, we should deduct the VAT at source. And other services, same as previous. And it's not discussed, required discuss to again. It's same as previous service, 43 service, which is disclosed previous rate. It should always, in case of provide challan by the supplier or not provide by the VAT challan, we should deduct. And in other case, the following system, 15% rated, we provide challan, not deduct, it's not provide, should be deduct. Other service, reduced rate, always deduct the VAT. In any reduced rated service, product, anything else, reduced rate means what? It is below 15%. We should deduct the VAT at source. In the first schedule, we should need not deduct the VAT if we provide VAT challan or not. And through any SRO exemptions, should deduct if it is applicable. It's also same, 7.5%. It is reduced rated VAT percentage. That's why issue VAT challan or not should deduct. In this case, procurement provider, if he exempted by SRO, previously we saw you should deduct. But in the procurement provider, in case of procurement provider, if he provide VAT challan, we should not deduct. If he not provide VAT challan, we should deduct. And in any other case, first schedule service, it's never we deduct a VAT. Fuel, gas, electricity, water, telephone, mobile, we know it's not 15% direct VAT rated. That's why we always deduct VAT from this. It's the same which we already discussed previously. All rated, that means we got 5 rated. One is 5%, another is 7.5%, another is 10%, another is 15%, another sum 2.4, 200 tak and 1000. All rated. If issues bad challan, you should not deduct. It's the exceptional case for oil, gas, electricity, water, telephone, mobile. You cannot deduct VAT. Like the telephone bill, like the Grameen phone issues the bill to you, you cannot deduct the VAT. You should pay the VAT, though they have different rate. In case of house rent, if it's 15%, you should deduct. Because of lender who provide house is not authorized to give VAT challan and collect the VAT. So you user, you rented person should deduct the VAT. In zero rated, direct export, deemed export, issue VAT invoice, don't deduct. Do not issue VAT invoice, should be deduct. Purchase from unregistered organized, always deduct. Who is not have BIN number, who is not have VAT registration, you should deduct VAT as a flat rate in all cases. This is similar case here. It may not be required again disclose or discussion. We know when may deduct, when may not be deduct. There is not different issues. I will provide this summary after the meetings. You will get. VAT accounting cycle. Previously, we follow the current account as per VAT account, but now is not required to current account. Another issue is provided current act. Previously, which was price declaration. Currently, we no need to record price declaration. So I prepared a cycle which may easier to maintain the VAT. How there is a purchase, vendor purchase. When I purchase, it's required 6.1, which previously was VAT 16. If the value is more than 2 lakh, then we provide 6.10. In same case, production. In same case, in sales, purchase, production, sales. Then goes to internal transfer from, like if it is retail business, like I am in job in pharmaceutical sector, we have several depots, several distribution and channel. We need to distribution product from factory to sales center. This is the transfer. In case of some obsolescence, expired, damage, we not required issue debit or credit note through VAT Mushuk 6.7 or 6.3. Then everything goes to 9.1. Previously, it was 19 monthly VAT return. But today, our discussion on VDS, which is here, VAT deduction at source, is provided by 6.6. Previously, it was Mushuk 12, and issue VAT certificate. And finally, accumulated with VAT return. Currently, it's 9.1. Previously, is VAT 19. So it's a simple VAT accounting cycle. It's a huge work here. If you want to know, you should download all Mushuk number and setting these cycle, you will be clear how to maintain VAT cycle. I believe that. VAT as under VAT Act 2012. There is 2 VAT SRO. There is a format which was for VAT deduction at source, how to maintain, and this is certified as a VAT certificate. I enclose here Mushuk 6.3, and I give some one to disclosure here. A VAT invoice against a supply in Mushuk 6.3 form. A registered person shall issue VAT invoice in accordance with the following procedures, such as VAT invoice against each supply in batch Mushuk 6.3 form. VAT invoice shall be serially numbered. It's very much important. If your VAT invoice is not serial serially, like 1, then 2, then 3, then 4, then 5. If you miss anything 1, 2, 3 or 1 to 5, then VAT authority may be penalized, maybe assume you may do some misstatement, give some wrong statement, or give some fraudulent statement. So it should be care always. VAT challan should be chronologically serially maintained. If the registered person makes supply from more than one place, invoice with separate serial numbers may be issued from each place on which the name of the place addresses, and the serial number of the invoice shall remain included. If you mistake to prepare any VAT challan, you should keep it, not deduct, not damage it. You should keep it as a misuse or misstatement or unable to use in your challan book, in your systemic book. It should be provide to the VAT authority if they query, if they want to know which one you not use in VAT serial number. VAT invoice should have to issued minimum 2 copies of each. The original shall have to be given to the buyer, and the duplicate shall have to be preserved by the registered person who may actually supply the product. In the case of supply where source deduction applies, it shall be considered as combined tax invoice and certificate for tax deduction at source. That means if you deduction or be applicable for VAT deduction at source, this certificate assume as a tax certificate for deduction at source. And another mushuk have been issued by the VAT authority, which is 6.6. It's as simple as different for service, which I discussed also here. A registered person shall issue certificate for tax deduction at source in the following manner. If the registered person make any supply to any withholding entity who able to deduct the tax, a tax invoice shall be issued Musok 6.3 for in the procedure is described in the clause C, which is as per VAT Act rules, and which is updated in 2016 and amended in 2019, established in 2020. But in this case, 6.6 should be keeping free. Previously, 6.3 we saw it's required only 2 pieces, but this requires 3 copies because one required in working place. So I believe that this is the formative issues. We have just put our values in this format. Now it's 100% is VAT online. We may issues in VAT online and format is here. Somewhere someone maybe use VAT software, which is enlisted by National Board of Revenue through VAT authority. We also give this paper, this format from our software. So far, I believe it's not a problem how to implement this structure or this 6.3 Mushok format. It already established in our software. It already established by our VAT authority. If you go to the VAT authority website, you may get this format, and details is here also. There is a Bengali language আর এই মর্মে প্রত্যয়ন করা যাইতেছে যে আইনের ধারা 49 অনুযায়ী উৎসে কর কর্তন যোগ্য সরবরাহ হইতে প্রযোজ্য মূল্য সংযোজন কর বাবদ উৎসে কর কর্তন করা হইল। কর্তনকৃত মূল্য সংযোজন করের অর্থ বুক ট্রান্সফার, ট্রেজারি চালান, দাখিলাপত্র বৃদ্ধিকারী সমন্বয়ের মাধ্যমে সরকারি কোষাগারে জমা প্রদান করা হইয়াছে কপি এতদূর সংযুক্ত করা হলো। In language থেকে we can understand this is the certificate that I already deduct the VAT. If you deduct the VAT, if you allowable withholding VAT deduction authority, you should provide this certificate to the supplier. Penalty under VAT Act 2012. Sorry, I take a few seconds for take my water. As for VAT Act 2012, They have issued some penalty if you not comply or not able to deduct in time and deposit in time. As per section 11111 VAT Act 2012, in case of issues, use, forget, or take VAT resistance certificate, turnover tax certificate, or invoice, withholding tax, source certification with mala video intention. That means if you do it intentional. Another case, if creates an use, forget, and fake credit or debit note, which already we discussed, you may issue debit or credit note if it is fake. If an individual evades tax in any matter or claims reimbursement of tax without being entitled, such individual shall be liable. That means if you are not entitled to deduct or claim reimbursement, if you did it, be sanctioned with imprisonment for 1 year. It's a huge capital penalty. You will be sanctioned for imprisonment, or be sanctioned to pay precautionary penalty equivalent to the taxable amount. It's a monetary penalty equivalent to amount which you take debit or credit note if you able adjust without any justification note. Same amount may be monetary penalty, or both imprisonment and monetary penalty may be sanctioned by the VAT authority. As per section 112, if any individual supplies to any VAT official any false or misleading information with intention, such individual shall liable. If you intentionally give misstatement, false statement, or misleading to any VAT officer, any and where provided or nominated officer, you will be sanctioned with imprisonment for a term not exceeding 6 months. Maximum 6 months you may get imprisonment and get a monetary penalty, or may get both. In the section 113, if any individual tries or obstruct with intention any official during performance of his duty in accordance with the law and rules and regulations, such as act shall be considered as offense. For such offense, the considered individual shall be liable to. That means sometimes our VAT authority goes to our factory, goes to our head office, want to know our database system, want to enter our software, want to know the documents. If we not provide, we not cooperate with him properly, or he may assume, authority may seems to be you are not properly cooperate or help to him to justify his work, you will sanction with imprisonment or a maximum term of 6 months, or monetary penalty 2,200, 2,000, or be sanctioned, or both. So be careful when any VAT authority goes to your premises or want to know your software entrance or want to know any documents from your software currently. If you obstacle create, or if you not provide properly, you will get imprisonment, capital punishment. So be careful. So I want to say there is a huge penalized act which is not justifiable. Sometimes I say it's a black act in this 2012 act. Previously it was section 37, currently is a section 85. There is huge penalty. This is only justified by the tax authority. You are not able to say anything. This was non-compliance or irregularities. Before going to penalties, I am to define something. Non-compliance or irregularities what? Sometimes you may deduct VAT and need to deposit within a stipulated time. You may forget, you may not be deposit. Your cash crisis was huge, that's why you may delay to deposit. And finally you deposit after a stipulated time. Then VAT authority found it and say you are not depositing properly, so you should give interest. Okay, you are agree. I pay interest because of I not deposit within stipulated time. You also pay interest. As per normal law, it should be closed because of I pay interest, because of I pay delay. That's why I pay interest. After that, if that authority feels or aggrieved or anything else, he may penalize under section 85, which was subsection I. Irregularity for willingly evading or attempting to evade assessment and pay tax. This was, he assumed you intentionally did it. You intentionally misstated it. You intentionally doing forgery. Then what will happen? Twice in the tax evade amount. That means total amount which you pay or deduct as a VAT 2 times will be penalized. This is 100% depend on VAT authority. You have not justified that I am not did it intentionally. I am did it to deposit, forgot, or it was some misinformation. I got the information, deposit information in later, or our system is not covered. Everything is systematically within time period. You cannot cover this act under this act because its assumption depend on the VAT authority. He assumed you did it intentionally, you irregularly did it. So you should careful about this. How do you avoid? If you want to know, this is simple things. You should very good relation with your authority, with your related circle, related jurisdictions to avoid these types of assumption, these types of attempt by the VAT authority. There's a normal. In this other thing, he also may give, you did it unintentionally, normally, non-compliance, he may penalize only 10,000 taka as per subsection A. This is normal things. You not follow a bad act, non-compliance, irregularities, only 10,000 taka he may penalty. And he has also keep power on zero penalty. What is it? On fake, you may forget to deposit, you may not have enough information at the stipulated time, that's why you may not be deposit. This is zero penalty can be did by the VAT authority. This is 100% depend on your relationship with VAT authority, so be careful about this. I want to say something under these sections. It is a separate section, not 100% related to value added tax deduction at source. It's a normal section. There's a covered all act. If you non-compliance, if you irregularities, if you misuse, if you cancellation registration, non-compliance or irregularities for not avoiding provision sections, everything's covered by this act. And this section mainly depend on assumption by the VAT authority. It's a probable, maybe, he assume, he may not be satisfied with you. That's why he may did by this penalty under this section. So be careful about this. Then we go second slide. Change in Finance Act 2020. I not take everything here. I just take small things here, which was mainly change related to VAT, supplementary duty, customs. Supplementary duty and custom also related to VAT. That's why I am included here something. Also exercise duty. Number one, value added tax. It is simple changing here. Introduce VAT online system. Previously it was manual. Also now you provide VAT online system, and simultaneously you should deliver your hard copy to the VAT authority. Increase VAT registration threshold from 8 million to 30 million. Introduction of input output coefficient system instead of the price declaration, which I already said. As per Finance Act 2020, there is a introduced new system. Input output coefficient. You should not give required to give VAT declaration, price declaration for any new product, for any new manufacturing product. It's not related to the service. And 80, in the time of import, it was previously 80B, it's 5%, is reduced to 4%. Also is a very lucrative for a businessman, which was previously 2 tax period to adjust your input tax credit. Now it's extend up to 4 tax period. So it's very much positive for the business holder and our who are regularly practice this. So if you forget to adjust your VAT within next month, you may adjust up to 4 tax period. That means up to 4 months you may adjust. You may take credit for your input tax to output tax up to 4 tax period. Second thing is change in shares custom duty. There is a 6 level of the custom duty, which was 0%, 1%, 5%, 10%, 15%, and 20%. It's everything is now is clearly inclusive, which was previously actually exclusive. That was not identified. Now is 100% is possible to identify. And the excess duty, which is related to excess duty, is some change on bank balance. Previously it was lower and now it's higher. Then it's a supplementary duty. This is SD. It's also covered by the VAT Act, which previously is not lower rate. Now it's slightly increased. BRTC, BRTA, which previously is 15%. Now it's increased 10% to 15%. Aircraft, helicopter provide service. Seaman rim provide service as the local manufacturer. And cosmetics increased from 5% to 10%. And ceramic sink, basin, etc. is 10%, which was probably is not under this supplementary duty. Then customs exercise and VAT commissionerate jurisdiction. So where we may deposit, so where we may register our VAT as per company situation, company factory situation, and factory positions, factory area. There is a large taxpayer unit. This is division 1, 2, 3, 4, 5, 6. Where under this area you should go. It's depend on mainly on turnover and the jurisdiction area. And another is a Dhaka South. Dhaka South under Dhanmondi region, Matizil, Tezgao, Nayanganj, Kotwali, Lalbagh, Munshigঞ্জ, and Segunbagecha. Dhaka West. It's included Mirpur, Mohammadpur, Savar, Dhamrai, Manikganj, Thangail, Jamalpur. Dhaka North, it's included Gulshan, Tongi, Gazipur, Mymensingh, Kishorganj, Netrokona, and Shahpur. Dhaka East, Sutrapur, Bandar, Rufganj, Sonargaon, Sidriganj, Narsingdi, Dambra, and Shampur. Chattogram, it's out of Dhaka. Its jurisdiction included Bandarban, Putia, Chatga, Agrabad, Rangamati, Coxbazar, Khagrasuri, and Chottolam. Kumilla. Kumilla's jurisdiction included Kumilla, Feni, Noakhali, Lakhipur, Brahmanbaria, and Chatpur. Silet's jurisdiction included Silet, Maulibazar, Sunamganj, Habiganj. Actually, we want to know this where I may register our VAT. It's maybe if your head office is situated in Dhaka, you may go because at now it is central VAT registration system. So it's not 100% required to factory jurisdiction. But if your head office and factory under this jurisdiction, you may go to VAT registration under this jurisdiction. In Khulna is included Khulna, Bagarhat, Satkira, Barishal, Perispur, Patuakhali, Bhola, Buriganga, Buranga, Jalokhati, Madaripur, Shariatpur. Jashore, Jinaida, Kustia. There is a huge jurisdiction. I will provide this snapshot to you. It's not required to take this time because it's limited to our CPT section. There's a Rajshahi. It's a divisional wise Rangpur. Now I am to say there's a digital VAT payment system. It's what? It's recently, it's maybe 1 or 2 months back, Bangladesh Bank, some 3 banks, and National Board of Revenue with VAT Authority. In this COVID section, COVID scenario, COVID pandemic, is a bank, is a public relations office, is very harmful to us. It's maybe harmful for transmission of the COVID-19. VAT Authority introduced 3 VAT online system with 3 banks. One is Midland Bank, another is HSBC, Hong Kong Shanghai Bank Corporation, and another is Madhumati Bank Limited. If you have any account, if you had any CD account, current account, short-term deposit or deposit account, whatever it is, you may pay your VAT deduction at source, total VAT, any VAT amount through online system. You need not go to bank, you need not issue physical challan, you need not to issue any pay order or any check to deposit the bank, may not should go to bank. You simply did it by your online system. If you go in online payment system in Midland or SSBC Madhumati, in tag you will get VAT payment. You should pay input your BIN number, your jurisdictions and amount. Automatically it's take and connected with NBR and provide the challan. Also you may print out the challan. So you can avoid to go bank under this system, under this way. We remember it's not promotion from me for this bank. I just share with you. It can easy to your life to pay the VAT in easy way. So far I believe it's completed. It's a simply VAT deduction at source. Mr. Ali Akbar, you may communicate for further any question and answer. Thanks a lot. Thanks everyone to hearing me.
Thank you, Mr. Alauddin, for your excellent presentation and enriching us about VAT rules. Now the question and answer session. Dear participants, you can ask your questions using the question and answer tab at the bottom of your Zoom app. I think we have some questions. Number 1 is from Mr. Chitto. The question is, as per what section VAT deduction is mandatory if reduced rate?
I already shared, actually just wait a few minutes. It's 43 service which is mandatory VAT deduction at source. I already slide here and it's issuing SRO in 2019. Previously it was 37, now it's 43. It's increasing last SRO number. I also have, if you want to SRO number, I will provide, and it's available in VAT Authority website. I also get this SRO. It's previously 37, currently is 43. Service is mandatory. And another things I already said, if it is reduced rated VAT, you always deduct VAT at source. This is as per Act and SRO.
Thank you. Another question is from Mr. Rafat Korim. In case of standard rate of VAT, 15%, if suppliers issue invoice without Moshok, should we deduct VAT?
Yes, I already said in case of 15%, this is general rated VAT. General rated VAT, every supplier should produce VAT challan. If he not provide VAT challan, you will be liable. Currently, tax and VAT is separated. If you deduct tax but not deduct VAT, your amount may be allowed the tax authority, but when you go VAT and audited by VAT, your amount will be disallowed. So you should deduct.
Thank you. Another is from Mr. Ragib Rai. It would be much appreciated if you please let us know the calculation of VAT, whether including or excluding. Thank you, Mr. Ragib Rai. I think today's topic is on VAT deduction at source, and hopefully we will arrange another CPD training for the calculation of VAT also. We are
Mr. Akbar, I want to share something else if you allow me 1 or 2 minutes.
Yeah, please.
Okay, Actually, we are manufacturing company, pharmaceuticals working hard. This is normal rate at 15%, but if you go the value-added tax calculation, it goes to 17.4%. In this practice, why 2.4% is extra? We should know is a mandatory value addition imposed by the VAT authority. Normal rate is 15%, and another value added rate is fixed by the VAT authority. It is included 2.4%. So if I pay VAT in input stage, is manufacturing stage, I should pay 17.4% on manufacturing product. If we are working in any manufacturing area, so we should know this. Thanks a lot. Thanks a lot.
Thank you, Mr. Alauddin. We are at the end of our session. At this moment, I would like to thank you all who have actively participated in this webinar. Your participation inspired us to arrange more webinars and CPD events. Members will be informed about our next CPD webinars via email and our WhatsApp group. And those who are not yet joined IFA as member can follow our LinkedIn and Facebook page for the update. Like our previous CPD, we will share the presentation via email and upload the recorded session in the YouTube. Please inform the members. Those who cannot join us today can get credit their CPD hour by watching our recorded CPD in the YouTube. I would like to give our special thanks to Mr. John Edwards, the Chief Executive of IFA, for his time. John, I appreciate your continuous support for developing the accounting and tax profession in Bangladesh, and your today's presence as an attendee prove your willingness for the members' development in Bangladesh. And also thank Mr. Jonathan Barber for his excellent support to the members. Many thanks to Linda for your excellent technical support. And again, a very special thanks to the speaker, Mr. Alauddin. Thank you all. Assalamu alaikum. Have a nice evening.
Thank you all. Very good. Thank you.
Thank you. Thank you. Thank you, everyone.